Hello, everybody. Welcome to Sniper Sundays. I hope you're all well and had a great weekend. Um, so we've got lots to sort of recap and review this week after a busy week in the market, but not the best, obviously. As many of you know, and as many of you have actually messaged me, even from very, very early on in the week, that it was a very choppy week, very it wasn't very busy. We couldn't get going this week. We had a bank holiday Monday, then on the Tuesday it was very quiet. Wednesday was quiet. Then Thursday and Friday we had some moves in the market, but there was a lot of manipulation and a lot of false moves, which I will go over and explain. So not really our week. Obviously, you guys that are new to my style of trading, and like I explained in the group, our style is going to be swing trading. So we're in trades for the long haul. We get in at the very bottom, get in at the very top, and then we hold our trades out. When we're in profit, we take some profit and we let our trades run. So we're swing traders. We're looking for 1, 2, 300 pips. Now, some people have been asking me about taking profit, so I'm going to sort of set out some rules, and I'm going to pin a message into the group, which is going to be sort of the rule book of how I want you guys to stick to. So basically, you sort of come to grasp with my stop loss method, and some of you can really see the benefits of this. Some of you not yet, because it might be very frustrating that you've had your stop loss hit quite a few times and then see trades move in the right direction. But also we can see this week that sometimes our stop loss have been hit and prices move very fast in the other direction. Now, as I said, you've got one account here. There's hundreds of trades that are possible to be taken every well, not hundreds, but there's loads of trades that can be taken every day or every week and every month. So we don't go all in. We don't throw everything on in one trade. We we're disciplined. We take 1%, 1 to 3%, but I recommend 1% trades off your account trades, and we have lots of those, and all together over the course of a week and a month, when we add all of those up, your account would be up very high percentagely. And then obviously you have a couple of losses. For instance, we had 2 losses this week. If you're trading 1%, that's only 2% of your account. 2 minor losses, and then we have one good trade next week, and then that 2% is made back in one trade. So you have to basically get used to the market, take it on the chin when you have a couple of losses. I've seen on Instagram and stuff like that a lot of people have just taken huge losses this week, blown accounts and so on, and that's what happens when there's a bad week in the market. But well, a lot of you have seen how you should act and how you should be controlling your risk in a market like this. So I'm going to get to some of these charts. I'm going to talk about the sniper zone situation later, to try and help you trade. But what my job here is to basically each day I'm giving you my market bias, telling you what I think is going to happen, and then give you all the tools you need in order to make that decision yourself. Now, when I'm giving you I'm not going to give specific entry points, because that signals, as I said, everyone is here to learn, and you want to become an independent trader. So after a few months of doing this day in, day out with me, you're going to start noticing these things yourself. You're going to understand how the market works, and you're going to be able to become a profitable trader by yourself. So as I said, I'm going to go over some pairs now, and we'll just start with Euro USD first. Now let's just start at the start of the week. Remember, we were up last night for Sundays. We were up at this level here. Or on Monday, we tapped this level. And I was explaining that I was waiting for a pullback. So all week I was waiting for this pullback. And then when I'm waiting for that pullback, I get a lot of messages, people asking, is it going to turn now? Is it going to turn now? Be patient and wait for the market to give you the signs. So you can see here on the daily chart, we've had this 1, 2, 3, which is that morning star formation. So it's a nice sign that we've got this bullish turn and the market's going to move back up. So we came down into that sort of region where I was explaining last week, where we just dropped down to the 4 hour. We can see here, this is where you need to learn to have patience. So I was explaining that we were going to have this fallback, and I was waiting for a retracement back to these sort of levels. Originally, I was thinking maybe around to these support levels, but price did go down even further. So then people are looking, messaging me saying, is it time to buy it? Is it time to buy it? But you need to wait, and just wait for the obvious signs in the market. So for instance, we can see here, bearish, coming down. We found a support here. I'll just get rid of this for a minute. We found this support, and then we kind of had a move up, and the market's never just going to hardly ever just hits one point and then just moves away straight away. It will come back to retest that for a second time or a third time or a fourth time and so on. And there's usually always a second there's usually always a second or third attempt. Now you can see here, for instance, on the 4 hour, we came down 1, 2, 3, then it moves away. So we came down, found a support here, then we came down, tested it again, and then we had that that pin bar here. Now this is that sort of obvious sign that I'm explaining to you to look for. Rather than trying to jump in the market and catch the bottom straight away, and having no sort of sign that there's anything actually happening or the market is going to turn, just wait. Have the double bottom here. That's a good sign. We could have took a long there. Stop losses below the last low, and then even though we had that one more pin bar here, still it only came nowhere near our stop loss. And then you can see here that pin bar, lovely sort of reaction sign that we're rejecting that level once again, and then we pushed off. So I explained the pullback on this, and then I explained where to take a long from, and lots of you did take this trade. Now just because I didn't give you an exact setup with a buy and a stop loss, as I said, this isn't signals here. You have to take on board what I'm saying. So if I'm telling you that I think this is going to turn from here, and then you can then look at the signs and then make a decision for yourself. So for instance here, we've dropped down to the 1 hour. A lot of you are asking, what are the signs to look for a reversal? So I'm going to start teaching you this on a daily basis. So you saw on the 4 hour, you have that nice big pin bar. You have to use all of the time frames to catch to catch the entries and to see the reversal signs. Use all of them. Everyone's asked me which one, so I'm going to go through them here. You have the daily to see the overall sort of trend. 4 hour kind of gives you the setup. So 4 hour, you can see we had this pin bar. That gives us the sign that we got the rejection here. So then we drop down to either the 2 hour or the 1 hour. 1 hour preferably, I like. At 1 hour, you can see then we have this level of support sort of around this level here. We'll always draw on a sort of region because it's not always going to be exact. But you can see we have this sort of level of support. So we've got support, 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 and then we came down and hit that support again on the 1 hour. So we just zoom in here. You can see on the 1 hour we've had that pin bar, doji candle, 1 hour bullish engulfing, and then a lot of you actually did take the trade and actually took a long here, and then you've made some nice picks on your USD. Let me just clear this. So there is other. So that is the 1 hour. I do then drop down to the 30-minute as well. 30 minutes can be quite good, and when looking at the right time. So you can see here we had that sort of 30-minute pin bar here as well, and then we had that bullish engulfing. You could just see we started to pick up some steam here. So that just shows you how you can get some entries. So I did call this pullback all the way down, and then from here we've had a nice push upwards of about 60 pips or so. So some of you are in that trade. Now I do like Euro USD to come up higher next week. I'm keeping an eye on it. We see Friday's price action towards the end was very, very choppy. You can see this massive 4 hour doji candle here, which covers, see from here, 1.1135 to 1.1130. So you can see that big whiplash sort of pulling in buyers, pulling in sellers. Just a lot of manipulation in the market on Friday. But I do think we might have a little bit of a pullback first before going higher. So I'll keep you updated, but my bias is long on Euro USD at the moment. So let's see how that goes next week. Now Euro GBP, pair that we were trying to basically short for a long time, and you might have seen that I mentioned that before, when we're in consolidation like this for a long time, what you do is you'll see the market push out to one way, have a sort of a false breakout to basically make liquidity and bring buyers and sellers into the market, capture some movement before moving in the opposite direction. Now I do think that Euro GBP is going to go down still. And what I was looking at for last week, again, very choppy price action, a very bullish, strong bullish 4 hour candlestick. So on that, you wouldn't want to short this straight away if you're looking at the 4 hour. But then we had a big 4 hour bearish engulfing and back below this sort of back into the range. You can see on the daily that massive pin bar. So again, I am still favouring to the downside. If we drop down to the 1 hour, you can see here that sorry about that, guys. You can see on the 1 hour here that when we did push up, loads of you got the sniper entries on this. We had that 1 hour candlestick. We had you can see the slowdown on the 1 hour candlestick. Then we had a doji. Then we had that 1 hour shooting star, and then you could take a short trade. You can see the shooting star, the doji, just slowing down in price action, and then we push back down. Let's just have a look. So you can see here, if this did start taking off and going through the roof, then we would. It was a good thing that our stop loss was here at take profit here, or sorry, at break even. And then when we do break higher, then you're out of the market. Haven't lost any money. And when you start seeing these sort of signs, you can say, okay, it looks like it's going to pull back down. I can take a short here, and you've got no risk. You're not in the loss because you're out at break even, and then you can capture an even better movement from even higher. So I do think it's going to go down lower next week. We'll be keeping an eye on this. There might be a little bit of a pullback on market open again, back up to these sort of areas. Might be possible to get a better entry from up here again, if not in this. You might have a double top or something similar, or a slight pullback before moving down. So my bias again is still short on this. So look out for short trades on this pair next week. GBP USD, tricky one this was last week. So I constantly kept looking for a long trade. Someone messaged me saying, why are you concentrating on this one pair? Now the reason being is because, again, we're getting the tops and bottoms of trades. I'm not getting in at the middle and then we get 100 pips or so. I'm getting us in at the very, very bottom or at the very, very top, so that we can capture massive moves. So we can capture 200, 300, 400 pips. That's what you guys want, and that's what I'm going to get you. Now, people are messaging me their thoughts and what they think is going to happen. But obviously, I've been in the market a long time. I know exactly what I'm looking for, and that's why we're all here. So when the market's moving down, when we had this big move, I started getting some messages in, then we all pulled back, and then everyone started messaging me saying the opposite. So I can see what the market's doing here. When we push back down here, and it just hit our stop loss, unfortunately, by about 10 pips, sent a message to the group to say, look guys, I am still long on this. Look for the long opportunity. You can see here we've had that 4 hour bullish engulfing, and if we just drop down to the 1 hour, sort of 1 hour bullish engulfing here. And again, if you drop down to all the different time frames, what you guys need to look out for is formations and candlestick recognition. You can see here on the 30-minute, we've come down and we pushed through, had that 30-minute bullish engulfing, which is a good sign. See here, we had that 30-minute bullish engulfing. Then we retested this. Now, if I just draw a little angle on here, we can see is if I drop down to the 15-minute, you can see there's a little bit of a head and shoulders movement there. Left shoulder, head, right shoulder, and then we pushed up. This happens time and time again on 15-minute time frames, 30-minute time frames, and 1 hour time frames, which I'll show you as we go on. But those sort of that's one of the formations, along with bullish engulfings, candlesticks, and other things that I've shown you, like tweezer bottoms and stuff that we will be looking out for. Now we are moving back up higher. Obviously, the end of market close on Friday was a bit crazy, so I'll just be watching out for this. I am still looking for long trades on this. I am still long on this. See on the daily, we've had this nice big pin bar, bullish engulfing. But as I said, I don't think we're going to just pull away straight away. We might have one more push to the downside, not as in down here, but when we open up, we might just see a little bit of a pullback, possibly down to around these sort of areas. And if we do, then I'll be looking at sort of long trades from around here, as long as we have the signs and we have some reversal signs from within these areas. So I'm looking out for long trades on GBP USD next week. So keep a lookout for that. Euro AUD doesn't really fancy, nothing I really fancy at the moment. We had a nice short trade, I said last week, where we pulled back. I explained that we pulled back to this level here, and from here, and we didn't quite make that resistance. But again, when I'm giving you guys my overall bias in the market, we were, say, 4 pips off that resistance level. When I say it's going to pull back here, and then from here, I think we're going to take a short trade. You guys need to look at the market and make a decision for yourself. If I just drop down to the 1 hour, I said we could see here we had some slowdown in price action, pull back up even here, but a bit choppy price action on this. But we did have a nice fall on Euro AUD last week. We were here on Sniper Sundays, explained we'd have the pullback first, and then we dropped a couple of 100 pips there. Euro NZD, another very, very choppy market. So we can see Euro NZD had this level sort of, have this area sort of mapped out, looking for a sort of head and shoulders movement from over here, this left shoulder. We came up, This is what I mean about last week. It's very hard to trade something like this. Let me just clear this a little bit. So lots of you were watching out and you actually shorted the market from here. It had a nice sniper entry. So from here, we've fallen about 100 pips on this 4-hour candle. From here to here, 90 to 100 pips. Then on the next 4-hour candle, after a big shooting star and a bearish engulfing, great signs of a push to the downside. Then we've had a 4-hour bullish engulfing. So it just shows you how choppy the price action was last week. Very hard for retail traders last week, basically. Some weeks price follows the technicals great. Some weeks it follows it okay. Some weeks it just doesn't follow it at all. Now, if the market's not following the technicals, there's not much that we as traders can really do. We have to just sit back, sit on our hands, and wait for the opportunities. So I'm staying away from this at the moment. Obviously, this level still interests me, this sort of head and shoulders movement. So I will be looking around this area. So if you do see some further rejection from here, then I do think shorts are still good. But just keep an eye on that. It doesn't favour me next week. It's not really on my watch list at the moment. You can see that nice retracement to the 61% retracement level. But given that we've had this choppy price action, I'm just standing aside and waiting at the moment. USD CAD, another one. It's just like the Euro GBP. Days and days and days in this range. Then we've pushed up to the upside. 1 hour daily shooting star. So I am looking for downside movement on this pair next week. So I will be watching out and looking out for that. We are just about to break this sort of counter trend line here. So once this breaks, I think that what we'll see is a break of this, and then we're bound to come back up and retest this sort of resistance one more time, and then we'll be looking for down to the downside. So something along those lines I'll be looking at. It'd be nice to get another entry from around this level here. So I do favour short trades on this, so I will be looking for that. Keep an eye out for short trades or that sort of setup that I just explained. GBP JPY fell off the face of the earth more or less last week. We had a really nice long trade. At one point we were 90 pips up, and then we came back and hit our stop loss at break even and moved down. So again, trying to pick the bottoms here, or we are picking the bottoms. Doesn't always go to plan, and this is something that I just want to explain to you with basically the rules that I want to be implying. So when we enter a trade, for instance, if we enter a trade here, what I want to do is, if we enter a trade, I want to have a stop loss in break even. Our stop loss at break even when we're about 40-50 pips in profit. So if you take this candlestick here, say if we entered at 1.39, let's just make a round number, 70. So when we're 30 pips in profit, I want to put my stop loss, or say 40 pips, I want to put stop loss in break even. Then when we're 100 pips in profit, or we hit our first target, which is usually around 100 pips or 80 pips or something like that. For instance, say it's this level here, that's exactly 100 pips. 100 pips is a lot in the market. So when you get to 100 pips, I want to take 50% of our profit, and then from there we let the market run, so that we continue to make money. So if this continued up, we go higher, lower, higher, lower. But you have 50% of your trade running constantly, and we don't until I say close it. Then we just keep letting it run, because what people find is, if I just delete all of this, is if you can imagine that you were in a short trade on GBP JPY and this was your target. So say you went short from here, let's just say from here, and this was your target. So everyone says, oh, what about targets? What about targets? So say this was your target now. So you came down, we were 30 pips in profit, 40 pips in profit, move our stop loss to break even. Then we came down, so we're 100 pips in profit. Obviously, the market could come back against us, so we want to take 50% profit when we're 100 pips, or when we hit our first target, and leave the 50% running, rather than keeping your whole 100% on, hitting your target here, and taking your 100% profit, and then the trade's closed. Rather than just letting the market do its thing and seeing how it actually keeps going, and keeps going. You never know when the trade is going to, how far the trade's going to go, or how little it's going to go. So giving yourself targets can sometimes hinder how much money you make in the market. What most people do, professional traders, what they do is they let the profits run. You might have heard a saying that cut your losses quickly, and keep your loss and hold your winners for as long as possible. That's because, again, let's just say for instance you took a short trade at this level, and your target was this support level here. So say that was your original trade on the daily. So you set yourself a target. Okay, great. So you're taking 100% profit out of the market. But if you took 50% of profit and moved your stop loss to break even, so it's a risk-free trade, then just continue to see how the trade goes. Then you could have seen that the market just kept going. That 50% trade that you closed here, or that you left open here, look how much profit you would have made. So you keep going with the trend. That's what you do. You follow price action, you keep going with the trend, and you let your money keep going. You don't just take out all of your profit at a certain target. So what we do here is like what I said here with GBP JPY, just using this graph as an example, is, for instance, you also don't know what the market's going to do. It can always change at any time. So when you're in profit, when you're in 100 pips profit, take 50%. So now you've made some money. The trade is risk-free. So you've made some money here. Market makes a big spike, turns around, takes you out at break even, fine, no problem. You've made 50% of your trade at 100 pips. You've made some profit at the market. Then you can reevaluate, and you can see, let's just say if we're here, all right, it's broken me at break even. It's come back up to retest the area, rejected it. Okay, I'm flat in the market. My long bias has changed to short bias. I'll take a short here, and then at 100, or my first target, I'll take some profit, and then I'll let the once that initial profit is hit, I'll take 50% and I'll let the rest run. So that is what that's basically how you trade, and how you make the most out of your trades, rather than cutting your profit short by hitting your target at 100 pips, taking yourself out of the market when that trade could continue to go on to 300 pips, but you've taken yourself out of the market, so you're not making any money. But back to GBP JPY, sorry, I am going to be looking at this market quite closely next week. I think we're well overdue a pullback. You can see this daily chart looks like death at the moment, but that's what they want you to think. And I will be looking at price action next week to see how we act around this sort of levels here. I think we might open up and open the market and come a little bit lower, but I will be looking at possibly reversals soon. USD JPY, another one falling off the face of the earth here. We were 90 pips in profit here, took some profit, then came down, took us at break even. Oh well, we took some profit out of the market, but we were 90 pips up on that trade. We were 70 pips up on GBP JPY. So you can see when we get in that early stage of the market here, getting in early, we had that nice big push, and 90 pips wasn't bad before we had the big turnaround. So weekly support at 108.100. I'm watching this level here. Very, very bearish on the daily here. So I'm waiting for price to come down and sort of hit this support. And from here, I'll be looking at this price turning around. So keeping an eye on that on USD JPY next week. Aussie dollar. Again, I actually, when the group opened last Thursday, not the Thursday gone, the Thursday before, I gave a long trade here, and we're in this long trade still. But many of you missed this, so I have been hoping that we might get a bigger pullback so you guys could get another entry, but we haven't really done that. We sort of just ranged last week, along with everything else, just range, and we're attempting to try and break out at the moment, but you can see we're having that failure on the 4 hour. We're going to be keeping a close eye on this at the moment. I do favour the long side on this still, but let's keep an eye on that next week. So yeah, I'll keep you updated on that. But I do like USD CAD to come down, so we'll be looking at AUD USD to continue going higher. Same as New Zealand dollar daily. Again, I called this quite nicely last week. Loads of you actually got this trade, which is really, really good to see. I called from here that we were going to have that pullback from these levels. I explained that we're going to be looking for the pullback down to around here. Now I did draw on a sort of region. Again, when I draw these regions, we have to, not the sniper zones, just regions. I can't be exact because I'm calling a pullback from here of about 100 pips. So we came down, people again, as soon as we got into that, were too trigger happy, asking me, is it time to buy? Is it time to buy? No, it's not time to buy. We need to look at the market and see what signs it's given us. The market gives us signs, and price action is one of the key things, which is what I'm going to teach you. Price action is very, very, very important in trading. Sometimes you can forget about a lot of other stuff. Forget indicators, Forget what people are telling you. This shows you what's happening right now, right here, right now, and then that's all what we need to know. With the way that I give you my stop loss and the way we use our targets, we can take money out of the market, and if our trade continues going in our direction, then we can make 200, 300, 400 pips in the trade. So here you can see we started to slow down perfectly. I mentioned that we had that Fibonacci retracement, to here to the 61. Now, yes, if you did get in here, you saw some rejection and bought with this bullish engulfing. Stop loss below the low of about 30 pips as always. Then yeah, you might have been coming in your stop loss a little bit last week, but you can see this gave you that feel good factor if you were in this trade, that we had this nice pin bar, that rejection of the 78%, move up, then another pin bar. Obviously, watching this last week, you had that pin bar, move up, put all the way back down, all the way up, and now we have another pin bar. Price has been so choppy. We've seen hit this pin bar here, and then a shooting star, then a pin bar, then a bullish engulfing. It's just been all over the place and very hard to watch. But it is going up, and we are making a move higher as discussed. So I am, again, I'm long. I've got a long bias on NZD USD at the moment. I am keeping an eye on it. Things can change early in the week. You can see here we've got this trend line resistance here. So we are attempting to break out and failing. So I will be watching next week. We could possibly pull all the way back, the way that this has been behaving. So I'm watching how price acts around here, but I'll keep you updated. I am looking for a long trade on that, or I am long on this, not looking for a long trade. We are long from this level here, and I'll keep you updated on that. So what we got here is gold. So yeah, we had a big bullish finish on the day. What I am looking for is shorts from around this area. Our stop loss is at 108 at the moment. I would probably like to widen that, but I'm going to leave it at that at the moment. And if we do, our stop loss does get hit, I will be looking at re-entering this from around this area. I do like shorts on gold. Yes, it looks very bullish, but looking at price action, you can see we just come up, we just hit this previous resistance here. In order to pull back, what we normally do is actually take out the hit above the resistance before, take that out, so we hit stop losses. Like a lot of stop losses will be placed around here, around 20-30 pips. That is why my stop loss was 50 pips on this, so that we don't get caught out with the noise or get caught out by the market trying to hit your stop loss before we have a massive move down. Now I am looking at gold next week, coming down from here. And as I said, if we have one good trade on any of these, we've had a nice trade in your USD. We have had a nice trade in NZD USD as well. But I'm looking forward to next week, because one trade will just erase the 2 losses that we had last week. I would like to, as I said, our stop loss is at 108 here, which is quite tight. Given how the market opens, it depends. But I will be looking at price action coming down, or price coming down from around this level next week. Creating this double top here and pulling back. So eyes on gold next week. At the moment, my bias is to come down lower, and I'll explain more and more each day. And on each trade, I'll give you a little bit more explanation. US oil, this really died last week as well. There's no catching the bottom on this. I'm glad I didn't even bother trying, because when oil moves, it bloody moves. So you can see here, daily candlestick, Marabuzu candle, no wick at the bottom. Very bearish, and then very bearish again the next day. Now again, choppiness last week. Why it's so hard for the technicals and for anyone to read price. Massive pin bar here. Price came down, pushed all the way back up by the end of the day, making this look a double bottom here on the daily, making this look like it was going to push up, and then we just had a turnaround, Trump talks and so on, and then this whole thing just turns around very quickly. That's why you need to have stop losses at break even, because if you were long on this, you want to have your stop loss at break even here to take you out of the market, because then look, bang falls a couple of 100 pips, and you don't want to be in that trade with your stop loss at 100 pips or something like that, when it moves so quick that it can catch you out. So please take my advice on board. Please learn how I tackle the markets, because it does work, and it's going to make you profitable, and it's going to keep your account safe. So yeah, we can see with this big fall to the downside. Let me just have a look at something I want to show you on the 4 hour. As you can see, a choppy price action. It looks very bullish here. Then price action is sometimes all you need. see here we had this double top, 4-hour doji candle, and then a big turnaround to the downside. That 4-hour doji candle showing us that market was rejecting that level. And these candlesticks on the 4-hour are very, very, very important to watch out for. 4-hour kind of gives you helps you with the direction of the market. Then you drop down to the 1-hour chart to get an entry. So 1-hour chart, you can see here we had that 1-hour bearish engulfing. From there, that is a good trade to take. Nice short from there. Stop loss above the $63 level, and then coming down. So that's the kind of things that you want to be looking out for. Similar how we had that 4-hour doji candle there is something that I'm looking at on gold. If you see how we ended on on Friday. See that 4-hour doji candle. I will be watching how this, and even here on the 1-hour, you can see you have this sort of evening star, 1-hour candle, doji, 1-hour bearish engulfing. I do think this is going to come down next week, but we just have to be careful it doesn't hit our stop loss. Maybe if you want to widen your stop loss, it's up to you, but if we get hit at stop loss, I will be looking at re-entry in this again. I'll cover it a lot more during the week next week. One thing I just want to quickly go over is if I do place a trade and tell you, or I give the setup, obviously I'm giving you my market bias and telling you what I think is going to happen. So you need to delve into the charts and get that entry along with all of my advice. Everything that I'm teaching you. For instance, if I tell you that I'm looking at taking a long on GBP USD, this is an example of what the sniper zone is that I want to tell you. So for instance, if I told you that I'm looking for a long on GBP USD, I'm going to put on a sniper zone. Say I put this as my sniper zone. Now you don't have to take a trade on this. This is my bias, and this is what I'm telling you. So if I tell you, right, I'm looking at taking longs all around this area. If I go down to the 1-hour, you can. It's up to yourselves if you want to take a long from these areas here, or if you want to be patient and be sniper and watch the market. Do what you think. If I tell you, okay, I'm looking at taking a long on this trade, and you think, no, this is going to come lower, I'm going to watch it for a little bit longer, which is fine because I will be doing the same thing as well, then let the price come down into that sniper zone. Let it possibly test the bottom of that sniper zone, and from there you can look at, then you can get an even better trade, because those areas of what I place are quite good at capturing where the market's going to turn. So don't just jump into the trade straight away. Take your time. For instance, here on the 4-hour, you see, okay, we've seen this big 4-hour pin bar here. Bernie has said that this is his sniper zone. We've rejected the bottom side of it now. I'm going to look at taking a trade, and then you can see here with that 4-hour bullish engulfing straight away. And then your stop loss will be like wherever I say. See, if you take a trade from here at the beginning of the sniper zone, you see how your stop loss, for instance, if it was here, you can see how big your stop loss is. Now, if you wait until we get to here, your stop loss is smaller and your profit is even bigger. So it's about being patient in the market. I'm giving you my views. I'm telling you, okay, I think this is the area that we're going to turn around. So then from that moment, we sit, we wait, we monitor the market, and we look for signs. You can see here on the 2-hour chart, we've had this 2-hour doji candle, then we have had a 2-hour bullish engulfing, sort of a morning star formation. These are signs that you want to be looking for, and then they can help you make that decision to pull the trigger and get that sniper entry and get that trade. But I'll explain more to you as it goes on during the week. I'll explain more about the entries. I said I'm going to write a message, which is sort of the rule book of how I want you to trade, and follow me. So we're all on the same rule book. You're all doing the exact same thing as me. So as soon as we get into a trade, we're all doing the same thing. Stop losses at break even at the same time, and we're all letting our profits run, and we're taking some profits off the table as well. It's all about making money in this market. So it is important about taking profits just as well. So as I said, when we're in that, when we hit our first target, taking some profit off the table, because you never know what could happen in the market. Last week shows you that anything can happen. You could be 90 pips in one direction. For instance, here you could be 90 pips in one direction 1 minute, and then a few hours later, bang, and then you could be 90 pips down. So rather than holding your stop loss here, being 90 pips in profit, and holding your 50 pip stop loss, what we do is when we get to 100 pips, or our first target, we take 50% profit, stop loss to break even. When it breaks through, oh well, we still made money in the market, and we'll look for another entry. And then eventually we will catch the long, and then we'll be holding it for 3, 4, 5, 600 pips, as you guys have seen me do before. So exciting week to look forward to. Tough week in the market. In a way, every cloud has a silver lining. Loads of you have said, I'm actually glad that this happened on the first week, because it shows you how to trade, it shows you how to control risk management, and it shows you how to act and keep your emotions in that sort of time in the market, which is very, very important. So yeah, in a way, it might be the best thing that ever happened to us. So we've all learnt now how to deal with stop losses, how to deal with losses, and now from now onwards, now that we've got the risk management down to a T, we're going to start pushing on and start making some money and start making some pips. So looking forward to this week. Not going to rush it. Let the trades come to us. But we've had that real big sort of influx of movement on Friday, so I can feel that the market's getting a bit back to normal a bit. We'll see how the market opens Sunday evening and Monday. See after that close how we react, and then we start taking some trades and we start making some money. So next week I can see is going to be a lot better than the week we just had. Enjoy the rest of your evening, and I will catch up with you the market updates very shortly. Thank you.